Deep Dive with David Stendahl, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey there, it's David Stendahl with tonight's Deep Dive. It is July 17th, 2019. Tonight I'm going to take a look at natural gas. The ETF in this case on the short side is KOLD. There's lots you can choose from. That's just one that I've selected. Now we've got the short, intermediate, and long-term trends all point to the downside. And you got the technical rating for the market is flat, so there's nothing really propping things up. And the reason I'm really looking at this market here tonight is because it has a tight support resistance level. Same thing that's going on, obviously, with different levels for the 10-year notes. But when we take a look at natural gas, you get a real good feel for what it is that I'm referring to. And so the easiest way to do that is to look at our targets specific to natural gas. Here's today's close, this diamond. And what we have are different projections as to where the market could theoretically be headed based upon support and resistance lines. Now, these support and resistance lines are based upon weekly bars, daily bars, and intraday bars, and they all come together to form a stronger weighted type support and resistance level. So it's more of a target, and it gives us an idea as to where the market theoretically could be headed. And right now, with today's close, what's very interesting thing that's going on here is that we have something that's very close to the current market above, meaning some resistance, this blue line, and it's got a strength, that's what the S stands for, of 118. C count, there's 4. So there's 4 separate support, or in this case resistance levels, based on those 3 different time frames. And when they add up all of their counts to look at their net strengths, it's 118, which is pretty strong. And then just below the market, we have strength of 116, count of 5. So that means we've got tight support above, tight support below, I should say, and tight resistance above. And what that means is that the market called this an energy zone, not to be confused with our energy level indicator, but an energy zone, that the market is going to ping pong back and forth between these levels, and eventually there's going to be a big move based upon the fact that there could be a breakout from these particular levels. Now, the reason I mention this is that what we do is we look at support gaps and resistance gaps based upon the same data. But what we're looking for is, should the market break from this level and break some type of support or resistance, but in this case to the downside, a support gap, when you look at it, there's a 3.3% move that could happen in the market based upon the fact that there's nothing propping it up. So let me just come back here to this particular chart. When you see big gaps like this, as opposed to little gaps that we have way up here, when you're looking at big gap here and another big gap, there's not a lot that's really holding the market higher. And because of that, it gives you an indication that if it should fall, and break some of these levels, that there's really little that's going to help to keep it at a higher level. So with natural gas, I would just simply say watch that particular market, because there's certainly an opportunity that's popping up here. Now the systems right now are short. In natural gas, we've got 2 systems that are actually short right now. I was going to pull it up, but it'll take too much time. So for our purposes, what the systems are looking for is a breakdown below certain thresholds so that we can get into that support gap and have the market really fall away. We'll have to see as to whether or not that's really going to take place. This is natural gas, and so one of the targets that we could be looking at is fairly far down here, and that's a nice little profit should natural gas fall to certain levels. There's just a lot of weakness to the market. Every time it bounces, it goes up a little bit higher. It fails. It's failed here again at the 50-day moving average. So systems are looking to the downside. There's that support gap that would encourage the market, if it was going to fall, that it could fall fairly far and fairly fast. But for all intents and purposes, watch the systems. They know better. They look at a lot of different types of tools, and will have a better perspective on things. So watch natural gas, and I just want to point out one of the things so you can find this information, because if I don't, then I get email saying where is this information for some of the charts that I'm showing. So what you would do if you wanted to see the chart, this one down here that looks at where the support and resistance levels are, you just simply come to signals, market targets, and that particular page would then pop up basically a big long list as I have here for the different markets, so you can get the particulars. Here's natural gas that would have pulled up that particular chart, and if you're looking for the support and or resistance gaps, you just simply toggle back and forth. You can see that natural gas has a resistance gap as well of 2.4%, so it can go either way. But here is the one I was just looking at, the 3.3% move in the support gap. So if ever you're looking for a market that has trade potential, meaning that there's little resistance to the upside or to the downside, this is your top 10 list in both cases, and gives you an opportunity to see as whether or not some big type of a move could actually take place. And the way that you initiate that is to find something that says tight support resistance in the deep dive, and then you can drill down into the particulars for that particular market. So with that, we will look at some more markets tomorrow and go from there. Thanks very much. Bye-bye.